Please be advised of the disclaimers.
Hey, welcome back to my channel. It's Pinnacle Trading here. Hope everybody had a great week. Friday right now, so heading into the weekend. So hope you all had a great green week. And again, looking at SPY, I'm going to go over why next week is going to be a big day, especially July 31st. So that's going to be on next Wednesday, why it's a big day for the markets coming up. So again, if you are new to this channel, make sure to hit that subscribe button and the bell button next to it to stay notified and support Pinnacle Trading on social media. So first thing, let's go ahead and look at a chart and how it closed out today on Friday. So today is July 26, 2019. So I'm not sure when you're watching this video, but that is the date for today. So looking at it right now, it's closed at about 302.23. So had a solid run up day. A lot of people buying in on fear of missing out on the run up that could come up if Feds do cut the rates and if the China trade deal goes through. So let's go ahead and zoom out a little bit on this chart. So we've seen that small correction in May. We saw a drop from 295 down to about 275s in the low, so 20-point drop, almost in about 5 to 10%, somewhere between there. A small correction, you may call it. And then what happened? Broke that resistance and broke out over 295. Big resistance at 300, broke through. Right now it's going to be at support and resistance at 302 and the next at 305. So what are we seeing right now? We're seeing the MACD come down, and we're also seeing MACD curl down up here, and we see it come back up again. RSI is still pretty high, about over 64. It was about 70 last week, just a few days ago actually. So basically looking at this RSI and MACD, this is no longer a good value. If you've seen my video before, my most recent video I made, why it's a bad time to start investing, I go over basically why it's a bad time to start investing, or if you're a new investor in the market, you don't want to be buying at the all-time highs right now, and before a correction comes up, or maybe a potential stock market crash that could come end of the year or next year in 2020. So looking at this, we're also seeing that not only is this pretty overextended right now, but there's a lot of big factors coming in next week. So let's go ahead and pull up the Fibonacci chart and let's take a closer look at the key price point levels. So right now we're seeing 286 as next support on the Fibonacci chart. What I'm expecting from next week is trade deal. Those talks have been going on for a while, but this one seems a little bit more serious. So we'll see how that plays out with China and Trump. And next thing, we're looking at the Fed rate cut. That's a 2-day event, the 30th and the 31st. So Tuesday and Wednesday. Wednesday is going to be the big day because that's when they give out the decision. So what I'm expecting from that is, if it doesn't go well, I'm looking for a drop to immediately to about below 300 to about 295. To have some support right there. It didn't break through this week or last week, so I'm looking for that support right there, but the key big support is going to be that 290. So if we do break that 290, expect it to break through this 286 and down to 276. So being a correction coming up, maybe in August or whatever it is, we usually look at 2 Fibonacci levels to break down to. So looking for 286 to break and then 276. If we do see a crash later on next year or recession, whatever it is, that's bad for the markets and the economy and US itself, we're going to see a lot more drop than that. Basically, we want to look at the most 100% drop. That's going to be at 233. So we want to look for that level, and we don't want it to break obviously for bullish, but if you are bearish, we want it to look for it to break. So that's my analysis on this one. And also, next thing I want to talk about is looking at gold. So we're seeing a lot of bullish articles on gold. People, when they see markets come down or sell off, they want to move into quote safer investments or low volatility investments, and they usually see US gold futures into that. Next thing, a big thing I want to look at is the analysis on the yield curve. So this is where we are right now. So you see about every 10 to 12 years we see a recession or a stock market crash or something in the economy that happens, and we see corrections in the way, but they don't really stop us from markets going up. But recessions, market crashes, that's what really bring the markets down, and then we start back up again. It's just a cyclical market, which means it goes in cycles up and down and small waves throughout, and then big ones due to unexpected events. So what we see is we've seen the recession, the most recent one in 2008, So that lasted from about end of 2007 to about end of 2009. So about 2-3 years it lasted right there, and that's where we saw this yield curve. As soon as it went back up, that's where we saw the recession. So we are, the yield curve is going down, which means the economy is quote good, or markets are going up. So when we see these markets going up, we see this yield curve go down. So right now what we're expecting is same thing, this pattern right here, same pattern. So they say history repeats itself, but is it going to happen again? We'll have to find out and see. So that's why I'm expecting a market crash or a recession, most likely next year, maybe during election time or whenever it may be, maybe even sooner, depends how everything goes. So that's another thing to keep track of. So if you are in the markets right now, again, I'm not a financial advisor in any way. This is just my analysis. If you're in the markets, it's not a bad time to start taking profits and maybe consider lower volatility investments, whichever it is that you want to get into, or hold some cash, keep some cash safe in case market crash does come up and you have opportunity to take advantage of that and get into the markets if you are a new investor and just waiting to get in. So that is my analysis on the markets. What do you guys think? Leave it in the comments below. Let me know what you think. Do you see a market crash coming up, or what do you see in the markets right now? Or are you just waiting to invest, or do you really not like to invest at all, and you just like to see where the economy and just learn about it more? So if you are interested in that, head over to my website. It's pinnacletrading.us. If you want to join the chat room where I call out these live alerts, options, day trading, swing trading, long-term investing alerts, investing in Roth IRA, etc. You can grab a 1-week free trial. Click that join now button. If you want to grab a membership to receive those immediate live alerts, head over to the membership tab, and you can grab a gold monthly plan. That's month to month, no contract, if you want to see how the chat room runs. And also I do have mentorship plan where I teach traders and investors live 1-to-1 from beginner to advanced strategies that I use and that have worked for me. So again, thanks for watching. Make sure to hit that subscribe button and the bell button next to it, and to see more videos like this, make sure to support Pinnacle Trading on our social media. Have a good weekend, and I'll see you next week.